You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back. In the studio today, we've got the honor of having Homer Brown in the studio. And he's with a partner with Smith, Jackson, Boyer, and Bovard, with offices in Dallas. And he is our tax expert that is here to talk to us today about some moves that you may need to make before the year end, as well as understanding the fiscal cliff and things like that are coming up, and trying to get it to where I can understand what's going on. Hopefully our listeners out there can understand as well. So we were just talking about the fiscal cliff and some of the actual deductions that you may be able to take today in 2012 versus what you would be able to take if nothing changes and we lose the Bush tax codes. And you were talking about the medical deduction being one of them. I'd like to kind of finish that conversation before we move on, Homer. So what are some of the other deductions that we may lose as part of this, and why it's considered a fiscal cliff?
Well, our tax law has been on a expiring proposition in that they pass laws that have a sunset provision. Each year, at the end of the year, we have certain tax provisions that expire unless they extend them. At the end of 2011, a number of tax provisions expired, and people really haven't felt the increase in their taxes because they haven't filed a tax return yet for 2012. And some of the things that expired last year that will affect a number of people in Texas, especially, we've gotten accustomed to the sales tax deduction on our itemized schedule. That actually expired at the end of last year. So if you bought a new car this year with sales tax that otherwise would have been deducted, and your not your property taxes, the sales tax on your purchases that you've been deducting as an itemized deduction, unless they extend that provision, you will not get that in 2012. Other deductions, there are several on the front page of the tax return. Educator cost for the first 250 educators were able to deduct that on the front page. Qualified tuition fees.
What do you mean by that? Educator, explain that to me.
Educator costs were that if our educators in the schools, public schools, and there were certain limitations on how much they had to be in the school and teaching, were allowed to take $250 out of their out-of-pocket expenses, things that they provided for the schoolroom, for the classroom, for the students. They were able to take that on the front page. Most of us that are employees have to take that as a other itemized deduction on their miscellaneous Schedule A. So that was lost. The qualified insurance premiums on mortgage insurance, that was also expired at the end of last year. For those people that were able to take that qualified mortgage premiums as a interest deduction, that's expired.
For like mortgage insurance, or MI, as we call it in our industry. So if you have your mortgage payment, if you take it out and look at it, you're paying principal and interest, and that's still the case unless it's taken away. You can take all 100% of any interest that you pay on your mortgage as a deduction. And up to last year, you were actually able to do MI as well, which is if you don't put 20% down, you always have a mortgage insurance, and that can be, $100 to $400 a month as part of your payment.
Absolutely. So, and there were a number of people
so that was a nice deduction to have. And we lost that at the end of 2011?
Correct.
Okay.
Additionally, those people over 70 and a half, they lost the ability to roll retirement funds directly to a charity. This was a provision that's been in place for a few years. That group of people could take an amount from their retirement account, directly give it to a charity without having to run through their taxable income, possibly causing Social Security to be taxed in order to make a charitable contribution. Now, that expired at the end of 2011. It has expired one other time, and they actually came into January and reinstated it retroactively and provided a small window to actually make that catch-up transfer.
Yeah, I was going to say that probably hurt a lot of charitable organizations by not being able to do that.
Absolutely. And the charities are hurting because of the ongoing recession. And they're also concerned about the possibility of capping itemized deductions because they would be impacted by that also.
Wow. Okay.
The biggest thing related to lapsing for 2011 is the alternative min tax patch. That is the one reason why I would think that possibly the government would take action, at least on a short-term basis.
Okay, so that's the alternative minimum tax patch? What is that?
Everybody's entitled to an exemption. an amount for calculating alternative min tax, which is a separate tax system. Some people refer to it as our current flat tax system because it only has 2 tax rates and disallows certain deductions, includes some additional income, has different depreciation methods. And since the enactment of the Bush tax cuts, we have patched that exemption amount with an inflationary adjustment every year. Now, if we do not patch it again with an inflationary adjustment, it'll go back to what it was in 2001, which was about $45,000 for individuals. Right now, it's up to close to $75,000. So you can imagine how much more people will be impacted by the alternative min tax than have been, which has already been a growing group.
If they're using that.
Yes. And if you're have over $50,000 of income and you're itemizing, you could be a candidate if you're not already in an AMT situation. And if you are, your AMT will increase.
Well, if you just tuned in, you're listening to Real Talk Texas. We've got Homer Brown in our studio today, and he's talking to us about taxes, some of the great things that we get to do in the United States. And I think it's important that we talk a little bit about the importance of filing your taxes. And I talk to some people and they say, well, I just don't get why we have to pay taxes. And I've always felt that I enjoy having a safe environment. I enjoy the police we have, the streets we drive on, and the military that protects us. So, I feel every citizen should contribute to that. And, I really don't have a problem with paying taxes. I just want the money to be spent the way that's a good benefit. And I think that's always the debate here in the United States. I take here's my money. I like a lot of things that we're doing. Let's not waste it. And I think that's the biggest thing that's on the table right now with the administration. It's going to be a big battle, I think, in Washington, D.C.
Absolutely.
And so I think that's something that's coming up. Last week we had Andy Robb on our show, and he was talking about financial planning and things like that. From a CPA or a tax advisor standpoint, Homer, what advice are you giving your clients right now when it comes to employer programs like 401ks and things like that are available to people that are employees? And what are some of the tax deduction things as an employee that you had mentioned to us off the show that you might want to share with our listeners?
That's a great question. Most people are wage earners, and most people rely on their employer-provided programs to save them taxes. And some of the programs that typical employees provide would be a 401k or a retirement plan of some sort where they can elect to participate. And the first easy decision is if that employer provides a matching program that is free money, they ought to sign up at a minimum for that amount because the employer is saying that they will match their money with the employee's money. And all you have to do is sign up and defer some. So that will save you some income taxes. I also believe that people should plan for their retirement. We don't know what's going to happen with Social Security long term. So they ought to be maximizing as much as they can into a retirement account. And again, it will save them income taxes. Other programs that the typical employers provide would be a flexible spending account. Flexible spending account are amounts set aside on a pre-tax basis for people to use for medical expenses. And those are great programs to save some income taxes on expenses you're going to incur anyway. And I will say, unfortunately, in 2013, the ability to set aside funds into those flexible spending accounts will be limited to $2,500.
So if you're spending more than $2,500 in your deductibles and your health care costs, you're not going to be able to defer that as income.
Right.
Through this.
Right.
And I had one of those at one time. It's like a Visa card where you use that for all your doctor's visits, and we put X amount of dollars in it, and we could kind of pick, do we want to put 1,000 in it? We want to put 3,000, family of 5, we put the max in there always. And it seemed like we always used it every year.
Absolutely. I mean, if you get to the end of the year and you haven't spent all of it, obviously one of the tax planning opportunities is to go ahead and spend it so you don't lose it. You'd also talked about other expenses that a wage earner might have, and those are typically called unreimbursed employee business expenses. Unlike somebody that's actually operating their own business, those types of expenses are deducted only as a miscellaneous itemized deduction on their Schedule A. and they are subject to a number of limitations. And when they come in, they say, well, yeah, I do have to come out of pocket to cover some of the expenses related to my work that my employer won't cover. And
now, that's a really good topic, and we're going to cover that after the break, Homer, and really dig into that, because I see that from a mortgage standpoint. When we do the taxes and we're doing income and qualifying people for mortgages, how they deduct things and all that on their income tax return can affect how we look at what is their gross income. And I want to talk a little bit about that and how it helps you, and some of the things from a mortgage standpoint, how it can hurt you, as far as things like writing off your mileage because your employer may ask you to drive your car instead of a company car. So, if you just tuned in, you're here listening to Real Talk Texas, and we've got Homer Brown. He's a 30-year expert in taxes, and he's a partner in Smith, Jackson, Boyer, and Bovard, located here in Dallas. And we'll be right back after the break, and we're going to dig deep into things you can do in the next couple weeks that'll get you prepared for your tax returns.